Traders, welcome back to the channel. We're going over the SP 500, the Nasdaq 100, exactly how the stock market moved today. Because if you're looking at this market, it's been a nightmare. You've been trading in this chop and then boom, you get shot. I'm going to tell you exactly what's happening and what you need to expect. First off, we need to look at our boy Joe Biden taking a selfie with this economy because thank you, Joe. Your lies on the market have led to ultimately this because you're saying we're not in a recession and we need to look at exactly what's going on there. This is Edward Lawrence. You can look at him, follow him on Twitter if you want. He's basically a correspondent for the White House going to Fox Business and Fox News. Now going on here, he was asking the White House specific questions, and these are the answers that he got. On CPI inflation, the White House officials, and we've already known this information going into today, that they expect CPI data to come out bad, but they explain exactly why they expect that. White House officials are telling me that they expect headline inflation will be elevated because gas prices, yes, they're turning this back on Russia. Surprise, surprise. When they say inflation numbers are going down, yada, yada, yada. But when they're going to come out bad, they're going to say, look, guys, it's Russia, it's Russia, it's Russia, which leads us back to the stock market, which we'll get to here in a second. Elevated because gas prices were 8.5% were greater in April than in May. The White House official says that this will seep into core inflation data through airline tickets because the price of jet fuel. And you're asking yourself, Tyler, what do you mean won't inflation just show up through gas prices? And if you know anything about core inflation does not price in energy or food prices. It's services and goods. So what is what does the White House do? They say, oh, it's jet prices. So people, our core inflation is being spiked because of jet fuel prices. I want you to let that seep in. A majority of Americans are experiencing this inflation from a broad spectrum. The main influence is jet fuel. This is what they're trying to tell you, people. This is really what they're trying to share with you. Going into this was the big one we need to talk about as well. He asked if we are in a recession. The White House official tells me that gains in the labor market and demand for goods do not indicate we are in a recession. Again, for everyone in the comments that are saying, Tyler, you're saying that we're not in a recession. This is the White House. This is what they're saying. They say that it's very unlikely and that the administration is in a good spot to transition the economy into stable growth, which he goes into what stable growth is, and then basically says whatever pre-pandemic. And I'm just like, what is going on? Y'all said that we were in a crisis pre-pandemic, that Trump was leading us off a cliff, and all this is happening. And if you're listening, I'm not a Trump supporter by any means. I just care about the economy. That's all I'm here to talk about. So that's the nonsense that's being spouted to us, and what happens from that level, we dump. So I want to talk about what's happened on the past few days on the S&P and exactly how I see us tracking forward. If you do not know, this range you are trading in right here is essentially for the past 2 weeks. So you have sat in this range trading for roughly 2 weeks time, just so you know. This is 2 weeks. You sat between 407 and 416. And basically the trade's been when you come to this zone, you buy. And then when you come to the top, you short, the end, back and forth, back and forth. Now, there was a few times I expected a breakout, but you just couldn't get it. You'd get pushing all the way up there, volume, and then it would die. The next day you would dip, right? And from this statement, people have been getting upset watching the videos. They're like, Tyler, you're just giving us a channel we're trading in. I can't make the market move in a direction, people. I'm just telling you how I'm trading it and how I'm looking at the market. Now, one thing we knew, what did I say? When you get out of this zone, I said, if you break on the top here, you get above this zone, where are you going? You're going to 428, 430 very quickly. You're going to shoot up there. I said, if you break below this, what do you expect? 402 to 400 is coming. Guess what happened? Boom. And in my opinion, this is going to start the inevitable drop, most likely to new lows, which are sub 380. But this is just getting us started. Now, going into this, people are saying, well, Tyler, what are you saying is happening? Are we going to new lows tomorrow? You need to know you do have a very big day coming up next Wednesday, which is the rate decision. And in my opinion, it's going to be another 50 BPS hike, which is going to continue. But they're going to address their viewpoints on inflation and how the market's transitioning. And is it kind of getting any type of bounce back? Are these rate hikes affecting us in a positive sense? When are they going to start tightening harder on the market? When are they going to start selling off some assets, things like that? And that has the potential to really cause us to start dipping further down. Now, we've gone over what's happening with the yields. And again, when we look at yields, again, people don't really understand this, but these yields, we can go back to the 2008 crisis, everything like that. When we come here, This is very indicative of what's happened. These are your highs back in 18 before you had a massive drop in the economy. Yes, SPY, Dow, all those. If you don't remember, you dropped a few thousand points in 1 to 2 days. And if you look right now, guess what happened? Yields are back at those levels, but they're rising to go even higher. Why? Because inflation is hitting us, people. It's not stopping. I've been trying to tell you. So when we go to that 10-year transition, you can see the reality check here into how yields are inverting. Guess what's happening? You're getting a closer inversion. Someone commented on the video the other day. They said yields aren't inverted. I've told you, no, they're not inverted yet. This has hit a 1.0 ratio. You inverted for a day, then you drop back down, you flagged, and now you're pushing back up. But guess what's happening? On the day, the 10-year performed decent. The 30-year did not perform as good. The 10-year is catching up to the 30-year, which is a key indication of a recession. And I'm telling you, people, it's happening sooner and sooner, quicker and quicker. We're going back here, and this is really the chart you need to be focusing on. You can come all the way back here and look. The dot-com bubble, last time you hit this region with an inverted yield, guess what happened? Boom, you dumped. Housing bubble, right here, boom, you dumped. 2018, you started to dump. Trump did a few things with the market, got people spending. That really helped, and he had government assistance. Now, what's happening? All we have is Biden, and I'm telling you right now, this is not to run Biden down. I have no, squall with the Democrats or anything like that. But I'm telling you, they are lying to the American people. They are lying. Go look at how they are responding and what they are telling people here. They are lying. It's as simple as that. Inflation is here. Look at VIX. We've been talking about VIX all week long as well. And as we get in here, we talked about VIX. We said a big move was coming. You started this bottom down here at 24.5. Today, you shot up from 24.5 up to 26. The real question is what happens is, can it get back above 30? Because you get there, it's really, really nasty on the market. So these are all things I'm looking at and how I'm looking at the market going into tomorrow. You have CPI data coming out very early, so you know there will be 7:30, I believe, Central, 8:30 Eastern on that CPI data. It could come out either way, in my opinion. If it comes out neutral, that could be very good for the market. Anything that's negative, though, in my opinion, has a negative effect on the market. Obviously, dragging us down most likely into next week, leading into that rate decision, anticipating the Fed to have a very negative stance on the market because they've really stood by saying job numbers are good, inflation slowing down. But guess what? Job numbers have dropped this week. Surprise, surprise. Lie number one, inflation appears to be spiking according to jet fuel. Number two, it just continues to happen over and over. So looking at Nasdaq, what do we see here as well? Now I'm just going to show you key ranges I'm looking at and how I see this thing moving going forward. We're going to use a 1 hour time frame just to give you a broad scale. Obviously, you broke out of this trend as well. You came to spot number one we were mentioning in Discord, about 12.25. You came down there roughly right here, then bounced. Now, number two, the big area we got to be watching. You're going to have about 12 to about 19. This is going to be a new range about right here. 12.05 down to around 12 flat is going to be very big. And then you're going to start chopping around this region. You have small areas around 11.8, 11.7. But honestly, once you get in here, it's going to be all depicting on the volatility and really what's happening. But you're seeing massive liquidity gaps in here as well. So once you get into this range, it's going to be clear free falling like you saw here from 12.45 all the way down quickly to 12.25. Almost instantaneous on the hour chart. For people asking right now, you're going to say, Tyler, so what's your viewpoint on a broader scale? Is there any chance for upside? I'm not saying you can't go to the upside. That's not what I'm saying. You could get data tomorrow. You could bounce. Hypothetically, data could come out either way. I'm anticipating more negative news. The White House is telling us that as well. So it's just something that you have to expect. And that's what the market is expecting right now. So going into this, where are my targets? If you're looking here, you have to make a hard bottom here around 401 to 400. And then your top range is going to be around, obviously, 407. That's where you anticipate this. So if you're trading it, you're looking to that upside of 407. I just don't see that happening. But if you want to trade the call side, that's what you're looking for. On broad scale stocks, we can look at something like Tesla. You made those gains this morning, and then boom, you're all the way back at 720. Amazon, huge drop today. 119, 120 was holding very strong, and then boom, 116 hit. Apple, man, you're dropping right through 144 in major support, and then boom, you're at 143, 142 roughly. everything just appears to be falling off of the face of the earth right now, and it's getting pretty bad out here. So looking at this, I do anticipate maybe oil can get some love, but besides that, I just don't see a lot of confidence in the market right now as a whole. So what am I looking for? I'm going to be very clear with you. If you get back into this 407 region, you're looking good to go back to 416. However, I just don't see that happening right now. As of right now, I'm trading as a bear to the downside, anticipating a push on to 390, 395. That's just how I'm looking at the market right now as a whole. And that's how I think I have to be trading, because we finally get that movement out of here and we got the liquidity push to the downside that we wanted. So that's what I'll be looking for in Discord going further, and how I'm going to be attacking this market. Now, when we look really quickly before I let you out of here, I want to show you cheddar flow, and I do want to show you the liquidity map here as well. So as we're looking here, I just want to take a quick look of how this is performing on Bookmap. On the liquidity pools, we can zoom in here very quickly and just show you. So going into the day, you had a lot of liquidity levels, major levels holding. In particular, 4080 was holding almost all day, and then power hour came, and then boom, it got taken out very quick. And you saw a large seller stepping in here as well. But one very interesting thing at the end of the day was you were seeing buyers on the iceberg orders. So you saw smaller buyers, only about 500 lots here and there. They were taking positions. I anticipate hedging into tomorrow, but you were seeing a little bit of buying at the end of the day. That's what I'm telling you. Going into tomorrow, the inflation numbers could be anything. It is a coin flip, and I believe it's a lot of hedging going on, because when we come back out of here and we go over to cheddar flow and we're looking at what's happening, let's look at SPY. SPY put to call ratio has ramped up to about a 1.9, 2.0 ratio. Going to the Qs, you've seen a lot of Qs coming in here as well on the put side, and you're seeing this kind of go down a little bit because this was sitting closer to the 2.0 ratio on both of them. So more calls are coming in at the end of the day as well. They are leveraging those positions and waiting. But the big daddy here is going to be the VIX. And you're seeing tons of calls coming in here. And a lot of these are dated going into next week. So that is worth mentioning. People are grabbing these. You have some September and July's coming in here as well. Pretty big orders to fill down here. Going over here, you can see as well, the VIX did get a really nice bounce. So tomorrow is going to be a very big day. You'll have your direction most likely right out of the gate, and I do anticipate more downside. That's what I saw coming yesterday, and I see it continuing into tomorrow.